There's a quiet but absolutely massive transformation happening across India right now. And it's not on the streets or in factories. It's happening inside millions of our bank accounts and investment portfolios. We're talking about the Great Indian Savings Shift. Today, we're going to break down exactly where Indians are moving their money, why it matters so much, and what's coming next for one of the world's fastest-growing economies.
Okay, let's dive right in. This chart, well, it's basically a financial snapshot of the nation. The inner ring shows you what things looked like back in 2019, and the outer ring is a projection for 2025. Just look at how dramatically the size of these slices has changed. This one image really captures the massive shift in how an entire country is choosing to save and grow its wealth. It's the core of the story we're unpacking today.
So what exactly is changing here? For generations, the go-to for Indian savers was a bank deposit. It was safe, it was predictable, it was simple. But that's just not the whole story anymore. We are witnessing a fundamental move away from these old-school methods and into a whole world of diverse market instruments. Now let's zoom in on that purple slice. This part represents equity and investment funds. Mutual funds, stocks, the works. It has ballooned from just about 15.7% of household assets in 2019 to a projected 23% in 2025. That is a huge jump, and it tells us there's a real change in financial awareness and, frankly, a bigger appetite for risk to get those higher returns.
And this slide, this really drives the point home. If you rewind back to 2012, bank deposits made up a staggering 58% of household savings. Fast forward to 2025, and that number is projected to be way, way lower. So the key takeaway here is simple. Money is moving. It's going from just sitting passively in savings accounts to being actively invested in the financial markets. This isn't just a trend, folks. It's the reshaping of our entire economic landscape. We're going from a nation of savers to a nation of investors.
So let's keep building on this. If all these households are investing more, who's actually the one driving this incredible market momentum? For years and years, the story was that the Indian stock market's health depended on foreign money. But the data shows us a new powerhouse has emerged right here at home.
For the longest time, the story was all about foreign money. FIIs, foreign institutional investors. They were the big fish. Their money coming in or going out could literally make or break the market. But is that still the case? Well, the answer might surprise you.
And this chart, wow, it reveals the brand new reality. That pink line, that's our domestic institutional investors, or DIIs. Think Indian mutual funds and insurance companies. The green line is the foreign institutional investors, or FIIs. And for the very first time, the pink line has crossed above the green one. Local, domestic money now owns a bigger slice of our market than foreign money does. This is a historic tipping point for India's financial independence.
So what does this actually mean in practice? It means our markets are getting tougher, more resilient. See, domestic money, which is largely fueled by regular folks investing through SIPs, is steady and consistent. It acts like a powerful shock absorber against the much more volatile foreign capital which can just pack up and leave based on global news. This domestic cushion makes our markets way less vulnerable to international shocks.
But listen, the equity market is only half the story. While stocks have been grabbing all the headlines, there's this other massive asset class, the corporate bond market, that's kind of been waiting in the wings. And this could be the next big thing for retail investors. So what does this number, 0.3, actually mean? Well, it's India's corporate bond turnover ratio. Think of it this way. If a market were a busy store, a high turnover means products are flying off the shelves. A low number, like ours, means customers buy something and then just hold on to it for a very, very long time. There's almost no active trading.
And to put that number in perspective, our bond market is just way less active than those in other major economies like China and Indonesia. Now, why does that matter? Well, a deep, liquid bond market is absolutely critical. It helps companies raise money for big projects and helps the government finance things like new highways. Our current buy and hold market just isn't living up to its potential.
And here's the number one reason for that low activity. Over 99% of corporate bonds in India are sold through what's called private placements. Basically, companies sell these bonds directly to a handful of huge institutions, like banks or pension funds, behind closed doors. The public market, where you and I could invest, is almost completely left out. This exclusivity is what's holding the bond market back from the mainstream.
But the good news is, regulators are working hard to change this.
The Securities and Exchange Board of India, or SEBI, is rolling out a whole toolkit to fix this problem. They're introducing platforms to give retail investors like us direct access, they're creating rules for green bonds, and they're beefing up the governance around credit ratings to build more trust. The goal is to pry open this exclusive club and make the bond market transparent and accessible for everyone.
This brings us to the crucial role of the market regulator, SEBI. You've got millions of new investors flooding into the market, and SEBI has to do this really delicate balancing act, encourage growth and innovation, but at the same time, make sure every single investor is protected.
This statistic is just incredible. With awareness at an all-time high, protecting this new wave of retail investors is more critical than ever. Sure, more people means more potential, but it also means more risk of scams and misinformation.
So to meet this challenge, SEBI is strengthening its own game. It's changing its board composition to include more independent members with deep market experience. It's also setting clear, predictable timelines for its investigations and inspections to ensure accountability. This isn't just some internal housekeeping. It's all about building public trust that the market is fair for everyone.
And SEBI isn't just making rules from an office. They're actively educating people. You've got campaigns like SEBI versus Scam to help investors spot fraud, and digital tools like SEBI Check to add a layer of safety. And this is really important. They've reclassified market infrastructure institutions, the big players like stock exchanges and depositories, as vital public services, which gives them a semi-regulatory role to ensure the whole system works with integrity.
All right, so with a more stable, domestically powered market and stronger protections in place, where are the new opportunities popping up? The Indian financial landscape is always evolving, with new hubs and new products coming online all the time.
A perfect example of this is Gift City in Gujarat, which is quickly becoming a major global finance hub. One of its star attractions is India's first international bullion exchange. Here, jewelers can trade actual physical gold and silver using digital receipts. It's almost like a stock market for precious metals. This whole process makes trading more transparent and way more efficient.
And the innovation doesn't stop there. We're seeing brand new, sophisticated products emerge. For instance, you've got electricity derivatives. These are financial tools that let big businesses lock in a future price for power, protecting them from sudden price spikes. And for retail investors, there are cool new options like infrastructure investment trusts, or INVITs. These let you invest in a whole portfolio of income-generating assets like highways and power lines, and you basically earn a share of the tools and tariffs they collect.
So let's bring this all together. India is making a fundamental shift from a nation of savers to a true nation of investors. This is fueling a more resilient, homegrown stock market. At the same time, regulators are working to unlock the huge, untapped potential of the bond market. With a stronger regulatory guardrail and a wave of new products, the opportunities are expanding. This transformation is real, it's speeding up, and understanding these forces is the key to navigating the future of Indian finance.